Okay guys, Bitcoin has been pumping quite heavily and we are luckily still remaining above the $21,000 to $21,300 level, which is the most important level that we need to stay above to get a bullish weekly candle close here in the next 13 hours, because as you guys know, we are already closing the current weekly candle within the next 13 hours, and this means we want to see a bullish weekly candle close, and we don't want to see the Bitcoin price getting sold off now within the last couple of hours all the way down to the $20,300 level potentially. So guys, let's take a look at the charts and let's find out how realistic this scenario is. I mean, if we're looking at the weekly, if we are looking at the daily, everything is still looking quite bullish. We are now here in our very important horizontal daily support and resistance area. Nevertheless, we already closed our yesterday's daily candle above all of the previous daily candles here that were struggling to break above our horizontal daily support and resistance area. By the way, guys, we are not only going to talk about that, we are also going to take a look at this very interesting on-chain data. You probably have not seen it yet. I think it's highly interesting and it definitely makes sense to look at something like this. And besides that, when we are taking a look at the end of this video, guys, make sure to smash up a like, don't forget to subscribe, activate the bell so you don't miss out on any future uploads. I would really appreciate it. And also, leave a comment down below so you don't miss out on any future uploads. But now, let's just jump right into the content, because as I already said, we also want to talk about this on-chain data, so let's not waste any more time. Right now, I'm still remaining in my swing long positions. I'm not planning to close any of the 2 swing long positions that I have open right now. The only thing is that I'm looking to potentially scale them up. In what scenario would I scale them up? Let's just jump right into the smaller timeframes, because on the charts, actually nothing that dramatic has changed since yesterday. We saw a small fake out. As you guys remember, I told you we need to break below the $21,100, $200, $300 range. We broke a little bit below it, but as you guys can see, we didn't see a successful retest. The retest was unsuccessful. We didn't see a rejection of the past support, so we knew, okay, the price is going to just continue trading within this rising broadening wedge. The only thing is that this rising broadening wedge is still a bearish chart pattern, so I am a little bit scared that this may somehow lead to a bearish breakdown and a massive sell-off within the last couple of hours, which could also be a manipulated move. Nevertheless, I'm really only keeping an eye on 21,200, 21,300. If these levels break, if we fall below 21,100, I mean, this would be a reason, if this happens before the end of the day, right? If we are falling below this price level before the end of the day, this would for sure be a reason to get a little bit scared. If we are breaking these price levels with the next weekly candle, so we are breaking here to the downside on Monday, not today, this would be a completely different thing. That wouldn't be bad. So guys, just watch tomorrow's video, even if we break down, because it makes a huge difference. Sunday breakdown, very bad. Monday breakdown, not so bad. Big difference. I will explain to you tomorrow why. If it happens, right? So let's just wait. But for now, 21,100, 21,200, these are the price levels that I'm keeping an eye on the short term. On the upside, guys, I mean, if we're breaking the $22,200 level, as I already told you, we are also getting our 0.618 Fibonacci retracement level at that price level as a resistance. So 22,200, I mean, this is really the price level that I'm keeping an eye on right now. If we break that to the upside and we close our weekly candle even above that, that would for sure mean that I would slightly scale up my swing long trades. Because, I mean, the liquidation price is so far down, it's at $15,400. I would double the trade at the $15,500 level. So my liquidation price for sure is far below the $14,000. So I for sure can scale this trade up as soon as we break above the $22,200 level. But for now, I will still remain on the sidelines a little bit till I for sure at least have the bullish weekly candle close. Besides that, guys, I mean, let's talk about the on-chain data. As always, as I already said, please make sure to smash up a like. Don't forget to subscribe, activate the bell. I really appreciate it. But now let's talk about this on-chain data. This on-chain data is highly interesting because what is it showing to us? It is actually showing to us the 30-day moving average of exchange flows, and not any exchange flows, but exchange flows from all exchanges over to derivative exchanges. So derivative exchanges, exchanges where you can leverage your crypto, right? Trade with leverage. Normal exchanges, exchanges where you only can trade spot. And we can see that in the most important accumulation times. So in these times where we have a big incentive for the whales or for people that know what the market is going to do next to go long. And we can see that in the past, this was always a sign for some strength entering the market. While when we had a very low amount of coins flowing from all exchanges over to derivative exchanges, this was most likely the top, because no one was interested in now leverage longing the market. Because in Bitcoin and in crypto in general, everybody is always more long than short. There's always a lot more long positions open than shorts, just because a lot of people are just long-term more bullish. So we really see these massive accumulation phases on swing long positions, just because these can in a run-up potentially gain hundreds of % on the position size, while on short you have a maximum of maybe 80% with Bitcoin if you time the market perfectly. And that's why this is very interesting, because you can see we are at a very, very high. The last 2 times we dipped now here at the $20,000 range, $19,000 range. So it's really looking that people are opening huge amounts of long positions, which is for sure a good sign. And especially because it's more or less flow from normal exchanges over to derivative exchanges. So it's people that already hold crypto but are now extra bullish and want to even leverage their crypto. So that's why I'm also, like I said, just staying on the sidelines, expecting a break of the $22,200 level till the end of the month. If this doesn't occur, I mean, then things will get dangerous again. But as I said, I think that if we see a final correction, it has to happen relatively soon, and now already with the recent pump, it's very unrealistic actually that we are going to see this correction. So this is a very good sign, but now let's just wait for the next 1 or 2 daily candles, and especially the today's weekly candle, because we just need to keep an eye on the $21,200 and on the $22,200 level. These are the price levels we need to keep an eye on. That's pretty much already it, guys. Nothing more to say. So if you enjoyed the content, smash up a like, don't forget to subscribe, activate the bell, share the video with your friends, leave a comment down below, and we are going to see us in the next video. Till then, bye bye.